Lemonade stock absolutely got smashed after reporting second quarter results. The question investors have to be asking, is this an opportunity to buy, or is this a company that just can't figure out how to be an insurance company? I'm Jason Hall. This is The Smattering. We're going to talk about that. We're going to talk about it with Jeff Santoro, the voice of the people, my good co pilot on this venture. But first, just a reminder, these videos are sponsored by The Motley Fool, our great partner. If you're looking for some more great stock ideas, go to our special link. You see it in green right above my head, fool.com/the smattering. The Fool's going to give you their 10 best stocks to buy right now. All right, Jeff, you've had a chance to look at Lemonade's results.
There was a lot that was good, and there was one really important thing that was bad. So let's talk about the good first. Revenue up 109%. Net loss margin slowly improving. Still not profitable on a GAAP basis, but revenue growth is really helping the bottom line slowly pull itself towards profitability. Customers up 21%. In-force premium up 50%. Premium per customer up 24%. All of that stuff is really strong. Here's the problem. They are still, when it comes to actually the thing that insurance companies have to do, which is balance what they're going to have to pay out versus the premiums they take in. Their gross loss ratio jumped up to 94% from 86%, and the net loss ratio jumped to 99%, up from 90% in the year ago quarter. Those are the top line numbers. Those are what investors are focusing on. And that net loss and gross loss ratio are likely why the stock is selling off.
We've done a lot of videos on Lemonade and we've talked about it before. And to a certain extent, we're kind of just repeating the same thing over and over again. But I think the the realities are what they are. What are the good things? The growth rates are fantastic. Lemonade's customers love it. They're adding more different kinds of insurance with Lemonade. Those are all really, really positive things. Again, that premium per customer amount going up 24%. That's somebody that had rental insurance or maybe pet insurance, and now maybe they're getting auto insurance, or maybe they had auto insurance or maybe they had homeowners insurance and now they're adding one of the other policies. They're growing up and they're doing what the big insurance companies do, the big P&C companies do, and they're adding more lines and they're becoming more sticky as customers take on more and more different kinds of policies with them. We talked about the customer experience. It's really good. It's easy to get a policy from them. It's easy to get a claim paid. They use AI in some really good ways there. But you said it, that loss ratio, it's supposed to be closer to 70%, like mid 70s, 70 to 75% is the target. We continue to see it go the other way. Now, Jeff, I think we'd be remiss if we didn't point out something that's really important here. And that is, if you look broadly across property casualty insurance industry, we saw elevated loss ratios, more unseasonable catastrophic weather, leading to bigger losses at most insurance companies, right? So they do say, I'm trying to find in the release, they provide some adjusted numbers, and they say that if you adjust for some of this catastrophic weather related losses, that their loss ratio was around 70%. And that's good. But my concern, Jeff, is you torture the numbers the right way, they're going to say what you want them to say. And so as much as you kind of look at that and say, that's a positive, you still want to apply that kind of critical eye to it. How do you think about that?
Catastrophic loss is something insurance companies have to plan for, right? So if you're an insurance company, you're assuming at some point there's going to be a hurricane or wildfires or some natural event that's going to blow up your insurance numbers in that quarter or that month or whatever. So to back that out, it seems a little bit like you said, like they're trying to massage the numbers to make them more positive than they are. And not for nothing, but it seems like extreme weather events are going to become more common, not less common.
Right.
So they have to figure out a way to run the business where they can handle catastrophic events because it's likely they're going to be there.
Yeah, no, I think that's right. But I also think in good faith, they are trying to give us more metrics to be useful to look kind of at the core of the business. And I think there's a couple of data points that maybe support that being the case. And Jeff, the biggest one, something that happened in the quarter, is they were able to renew essentially all of their reinsurance deals, right? And reinsurance is a big part of how they plan to operate. And they were able to keep relatively favorable terms. So that tells me that the reinsurers like what they're doing. So maybe the trajectory is better than the numbers are showing. And another positive thing, the California Insurance Commission did approve of them being able to raise, I think it was a 30% increase in homeowners and a 23% for increase for Lemonade Pet. So maybe that will allow them in those key markets to really start flexing their muscle and bring those loss ratios down. Jeff.
Yeah, the last thing I would point out is they are still a small company relative to the rest of the insurance market,
Oh,
other
tiny. Yeah.
competitors. So as the, if they can keep these really strong growth rates up, that will also be a way that they can mitigate some of the impact of the catastrophic loss, right? So the reason that a company like Geico or Progressive can handle catastrophic loss a little bit better is because they have
Geographic diversification.
and a much larger pool of money coming in from different types of insurance. So they're not so concentrated in any one geography or any one type of insurance. Like the auto
Right.
insurance part of the business, which is still newish, could really benefit them over time.
Yeah. Last point I want to make about the stock price coming down. The stock price has absolutely had skyrocketed this year. And it was set up where they almost had to deliver the perfect quarter for something like this to not happen with the stock price come down. So again, I'm not saying that this decline makes it a buy. The entire thesis for buying Lemonade right now, you have to believe that they're going to figure out the underwriting and they're going to continue to grow profitably and make that transition. If you don't believe that, then there's no reason to buy the stock. So you have to have some belief that they're going to turn that corner.